Hello, I'm Mike O'Sullivan, Chief Economist at Moonfare. The end of 2025 is almost upon us, and we're looking into 2026. And even though it's a cold day in Berlin here, we're actually quite hopeful for what 2026 will bring for technology, politics, geopolitics, economics, markets, and of course, for private assets like private equity. The top 10 themes is the way we tend to frame the world. You'll be able to find that on the Moonfare website, and of course we're going to send it to all of the Moonfare clients. It's a long document, but hopefully one that will be useful right throughout the year as we chart the progress of economies, technologies and markets. Broadly speaking, there's three things to be mindful of in terms of private asset investments. One, the economy globally is likely to improve. I think we're going to move from weak demand to supply side constraints. For the moment, broadly speaking, interest rates are going to hold where they are. Second, AI is the dominant theme of the day. 3 of our 10 themes relate to AI, and it's also a really big driver of capital markets. And we think we're in the foothills of an AI boom or CapEx boom that will continue for the next couple of years. Third important thing to watch really is capital markets. Having been in the doldrums for 3 to 4 years now, they're really getting going, and this is important for private assets, PE, venture, etc., in terms of plowing capital back into the industry. So let's get into the top 10 themes, and again, the first 3 relate to AI. The first one we've called Railway AI, relates to the imprint of previous bubbles and CapEx booms on the AI industry. We think we're moving now from the first phase into the second phase. In terms of what we're looking at, we're drilling down into individual industries and innovations and trying to see where entrepreneurs are actually beginning to apply AI within companies and sectors. We expect AI CapEx to continue, and it could even get as strong as the railway boom of the 1900s, when investment in railways and railway infrastructure got up to 6% of GDP. A second related element and theme is what we call Cold War AI or sovereign AI. And that relates to the strategic nature, not just of AI, but to all the things that support AI, data centers, energy in particular. There's a struggle on for rare earth, and we expect AI stacks, if you like, or ecosystems to become increasingly aligned with the big regions of the world, Europe, China, and of course the US. Third theme, which relates to AI, is what we call Dalloway, after a recent film. And that really means that we're going to see more and more of the implications of AI for our societies, how we work, for labor markets, and then in a really positive sense for healthcare. So AI is going to be much more present in our lives and also across our societies. Let's turn a bit now to markets. We start next year, I think, with US equities in particular being very expensive. The dollar is very high, and we think we will see a switch from expensive assets, US equities is the example, to more defensive equities, safer sectors, but also increasingly people with portfolios of assets will see private equity as a cheaper substitute, if you like, for equities. I think also in capital markets, there's going to be a really interesting turn. We're beginning to see, and this is our 5th theme, which we call Wall Street retro. We're really beginning to see an uptick in IPO activity, an uptick in mergers, and also an uptick in deals between private equity companies and targets. So next year should really be the best year of the last 5 or 6 for capital markets. Really important for private equity, venture, and other private asset classes, because it plows money back into the system, and that's distributed to investors and also reinvested in companies. There's at least 2 economic themes we want to mention. One is which we call the age of debt, and that refers to the fact that all of the major economies, be it Japan, China, the US, many of the European economies, have large debt loads. debt to GDP over 100%. And that's quite scary. And the fact that they've all got that level of debt at the same time is even more worrying. The good news, I think, is that households and corporates are really much more solid, much less indebted. But the imprint of this debt will continue to drive politics and economics. We're seeing it in Germany, for example, with the debate on pension reform. We're seeing it in the UK and France, where those governments are struggling with budgets. And the same thing, I think, will be replicated in the US and Japan and also in China. One of the interesting private trends here is that we expect private investors, be it private equity or pension funds, to increasingly do the investment work that governments would do, investing in energy and technology. So there's going to be a really big shift in financial and economic power because of the debt load of governments. Staying with economies, we're really focused on the implications of the K-shaped economy. The K-shaped economy really means that the holders of wealth, the wealthy, are doing very well. Markets are very strong. About 50% or so consumer spending in the States is done by the top 10 households. And if you look at some of the reports we're getting from US companies, people further down the pyramid are really beginning to struggle. So the policy implications and also the implications for companies in terms of their sales of this K-shaped economy is going to be a driving trend as we get into next year. Let's move now to the intersection of geopolitics and markets. We've left globalization. We're into a period we call the interregnum. It's an uncertain period. And in the market context in this interregnum, one of the interesting sub-investment trends is investors, particularly family offices, I find, looking for uncorrelated assets. So assets that are uncorrelated, that give you some diversification it could be to US equities, for example, and that can be currencies. It can also be other forms of private assets. But that's an essential task of the investor as we head into 2026. The world we're going into, of course, is a multipolar world. And we speak all the time about the US, Europe, China, the three big poles of this multipolar order. And our ninth theme is all about the multipolar world, but really focusing on the potential for a new fourth pole around the Middle East, around the Gulf states, Saudi Arabia, India, etc. I've just come back from there. It's an absolutely thriving region of the world and one that really bears watching as an investor for some of the most promising growth we're going to see across the world. And then finishing our themes on Europe, the big European governments really haven't got growth going, be it Germany, the UK, France. Spain is doing much better. Italy is in fine fettle. But we expect that governments across Europe and the European Union itself will be under more pressure to deregulate. And that's a positive trend. Households, banks, companies in Europe have cash. They're beginning to deploy it. And I think if we get some of these regulations pared back, that can really help the European economy as we head into 2026.